So thank you for bearing with us. I will just turn the discussion on now. So again, once more, thank you for joining. And I'm Abhishek Banerjee, founder at Lotus Tube. Today with me, I have Dr. Prachi Devskar. She is a co-founder with me. She's been with me from day one, and she also teaches at Indian School of Business. But today we are going to talk about something profound. I'm getting a lot of messages and calls from investors, customers, like markets are cracking, and market is not looking so nice. How should I deal with my investments now? There has been a drawdown in the small cap. Should I put more money in? Should I take my money out and do something with it? These are some of the most common questions that people are asking, and we are going to tackle many of those questions today. But overall, let's understand कि बट हो क्या रहा है, क्यों ऐसा हो रहा है, मार्केट की थोड़ी सी लगी पड़ी है. तो in that sense, why is the market languishing when there are things macroeconomically we have seen that India is not in a too bad a place. So what is exactly happening? We had a very good budget. In the budget, Prachi, we saw that there was almost tax exemption of 12 lakhs. Interestingly, um, there was a thought just before that, Prachi, that in US they will get rid of income tax. Just to put it in context, waiving income tax up to 12 lakhs is a very small portion of India which is going to pay tax now. So it is almost that we don't pay income tax in India. It's a very small, tiny portion of people who are now in the tax bracket. It waived off close to 1 lakh crore of tax collection, which is basically money in the pockets of consumers, right? And then uh, that was a positive. And then we were in the uncertainties of US tariffs. US tariffs may, what will happen to US tariffs? Will there be more tariffs? There was a talk of BRICS currency, and that is attracting 100% tariffs, so that ensured further devaluation of Indian rupee. So Indian rupee got weaker, which is inflationary in nature. Tariffs are inflationary. um, Markets, especially mid and small cap, they're minus 20%, minus 22% for the last couple of days. It's been trying to recover, but basically we saw 8 days of continuous market fall. Right, it's a pretty long streak, quite unnerving for investors.
Yeah.
People who have got in at the top, for them it's kind of, should I stay? Right, am I missing something? That's kind of the main thing. Like, why is this happening? And what kind of action should I take around this, right? So that is the main concern here. So we'll to that extent, I think, Prachi, talk about standard deviation, right? Or 18%,
Yeah.
20% is the standard deviation of markets.
Yeah. And so everything that Abhishek mentioned, that feeds into the volatility of market. There is a lot of uncertainty. New US president, different policies, tariffs, whether tariffs will go, whether tariffs will be used to negotiate positions, how will it affect India, how will it affect global trade, how will the position affect the two wars that are going on. So whole lot of uncertainty, and feed into that the interest rate uncertainty as well. What will Fed do, and what will be RBI required to do in response to US interest rates. And so all of this feeds into volatility, which is standard deviation.
Yeah.
And we have seen that standard deviation has been, in addition to falling markets, standard deviation has been very, very high. And in general, investors are unsure, and that also their uncertainty also feeds into this volatile, highly volatile markets, highly great deal of uncertainty about global macro condition, and that is what is feeding into this high standard deviation.
Standard deviation, matlab, going by normal distribution, there's a 67% chance that, if you look at 1 year standard deviation, there's a 67% chance that the markets will be up or down by that much in a 1 year time frame. So whatever we are seeing right now, it's well within the realms of what is considered to be a normal market. There's already somebody on the chat which somebody is asking. So I've been a subscriber ऑफ स्मॉल केस लिस्टेड वेंचर कैपिटल, एंड 3 साल से मैं सब्सक्राइबर हूँ, बट अभी तक कभी भी ऐसा नहीं हुआ कि कंपेयर टू द इंडेक्स द बास्केट हैज फॉलन this much. So this is again like one thing I would like to point out is that we have seen this, right? It's a 5-year track record. When the markets are drawing down, there is a chance that for a certain amount of time the basket might not do better than the index. That's why whenever we onboard you on the risk profile, we always ensure that if you're a high risk profile investor, you invest up to 20% of your risk appetite in such a equity basket, and for a low risk profile guy the allocation should be much lower, and we advise you on that. But I think the concern is genuine. ऐसा हो सकता है, ऐसा हुआ भी है पहले. In It is quite possible, and we expect that whatever is the short term dislocation that will get corrected, and we are pretty sure that the macros are still pretty strong. People are talking about FII selling as a negative indicator. मतलब just to put it in context, 10% बेचा है. So it is not that much, and compared to like what is happening elsewhere, like China, Argentina, Brazil, these are some of the options जो international investors के पास available है. They are exploring those options. So it's not that they do not like India. It's just that other markets are some offering more attractive opportunities. If you look at the top 10 markets of the world, right now, India is the worst performing market in the last 6 month time frame, and typically these things are mean reverting. So what you would see is that these things catch up because on an average the Indian GDP is quite healthy, the global GDP is quite healthy. So we don't see the wars are getting wrapped up. There's more investments in energy, so that is what kind of is driving it. Uh,
Just adding a point to this, that in high volatility situations, it can happen, as Abhishek said, that even though there are we have strong conviction in our stock selection, for a short period it may happen that they will underperform. It's also part of how high volatility plays out. And these are kind of long term investments. So in the short term, they may deviate from the path for a little
sure.
bit.
Which is ऐसे होता है, for sometimes small caps will underperform large caps. So sometimes India will underperform China. So at a different level of scale, there might be momentary dislocations, but it is a fact. It's proven beyond doubt that small caps provide better returns than large caps over
High quality small cap, which is what
yeah.
we specialize in identifying.
I mean, even the index, right? Even the small cap index outperforms the large cap index over a complete business cycle. So, by definition, index contains higher quality companies because there's a inclusion criteria that must be met by constituents. So that is very important. That when you compare index, there is already a inherent quality that comes with the index performance. So, to that extent, yes, high quality small caps will outperform high quality large caps as evidenced by past historical returns. So that's why people invest in smaller companies versus larger companies. Looking at few other things like impact of dollar, right? India is imports oil and imports a lot of gold. So imports, if you look at our import bill, I think it was roughly around 59-60 billion dollars for the last month, and we exported about 40 billion. So there's a trade deficit of about 20 billion. So on a year, that gives us about 200 to 50 billion of trade deficit, which is why there's a natural, devaluation of Indian rupee, which makes Indian exports even more competitive. But on top of that, the fact that there might be tariffs that will be introduced, which will cause these kind of uh, pricing dislocations, which create inflationary pressure. So these are some of the things. But see, overall, we are quite convinced that this provides a good opportunity for a long-term investor to kind of get into the market, to be a long-term investor over a complete business cycle. There has been talk in the TV that whether markets have topped out, whether I know there is still legs. Based on the evidence that I see, I don't see any evidence of currently it being the top of the market. But these are all basically subject to research, right? So that's why we have to keep watching as the data
Yes,
evolves.
yes, and oftentimes, when markets are crashing and a lot of volatility, there is a lot of media coverage and discussion that may frighten even the long term investors,
Yeah,
right? But for long term investors, these are kind of short term blips,
yeah,
and that is something to be remembered, that these are this volatility is usually temporary, and it kind of comes back down.
correct. So I mean, see, it is one thing to say you're a long term investor, but your long term vision aata hai through faith, right? You have to have faith that markets are a compounding machine. It is designed to compound your wealth, and if you stay long in the market, they will reward you, right? If you try to time the market, game the market, like try to basically do things in the short term, this is not investment is not the way, right? Then you have to look into the realm of trading, and possibly in the high frequency trading realm. There's actually a quote by a Nobel laureate which says that markets are predictable in the longer term but not in the shorter term. So it's a fact that short term market prediction is not very useful or accurate, but long term you can really identify what are the outperforming markets. So therefore something which you have to keep in mind: the more time you spend, the more time you're with the market, the more it's going to reward you. I would say, probably like being longer in the market, even with a mediocre investment, will give you much, more satisfaction than being with the best investment and trying to time it, because it's extremely hard. If your portfolio is down by 25%, somebody is asking like, should I restructure? Yeah, I think, there the question is really risk appetite, right? So if you're a high risk investor and you have put 20% of your allocation to a high risk basket like listed venture capital that we produce, and there, if your other investments are not down that much, you can definitely reallocate to the weight that is recommended. So it's you can reallocate to a particular target weight,
Yeah,
and that's kind of the professional way of doing it.
correct. And within the basket, we are of course monitoring the composition continuously, and whenever needed, we rebalance the basket, and those who are investing in the basket will get that notification.
Yeah. So Mr. Nandakishore Joshi is asking, I see your small cases underperformed over other leading fund house funds. I'm not sure exactly what you're comparing to, but I think we are focused in micro and small cap category, and around that category, what we are kind of looking at. Uh, there might be other fund houses. Let's say if you look at a mutual fund, right, they have 50, 60 stocks in their portfolio. They are close to the benchmark, right? So in that case, they have a different risk profile. These are concentrated equity baskets. They are supposed to be designed to be more risky than your normal mutual fund holdings. Fund houses, for example, they also have cash allocation in the portfolio, which we do not do. We know cash allocation, we have zero cash allocation. There's a question about use of debt in the portfolios. It's one thing. So you have to understand, we have we are creating a sleeve of the portfolio which is part of your overall asset allocation, and uh, that is the case with the respect of providing allocation to your overall portfolio. So if you are getting our advice on the total portfolio, on your total portfolio advice, then that will be a portion of the portfolio. But in that equity basket, we are not allocating cash. That's a fully invested basket. But looking at this kind of market regime, Prachi, what have you seen before? What you were mentioning about some of the research work that you have.
Correct,
Yeah.
correct. And so in the research that I have seen, and some of it I have conducted, in times of turmoil, typically investors who stay invested or even buy kind of earn a compensation over long term,
Mm.
right? And so if you're a long term investor, you may miss out on that compensation when the markets recover, if you are
Yeah.
trying to stay. So that is generally the pattern seen in when other people are selling, when markets are in turmoil.
Yeah, and I think, see, broadly, you have to, these markets will have multiple regimes, and the key concern is like, it's good to know that if you stay invested in a market turmoil, you are going to be rewarded, but the issue is like, is there more downside, right? And should I wait longer, right? Can I kind of get in at a better point? And unfortunately, it is one of the toughest question, right? And the only we can give an educated guess. We can say that maybe we don't know, but here are the reasons why it doesn't seem so, right? So for me, it doesn't seem that we should wait too long, because to me it seems that there are enough good news that is not getting priced in the market, which is basically kind of signals the end of correction, to my mind. And also, looking at the global macro scenario where wars are kind of getting wound up, there is intent to kind of rewire the supply chain with new understanding. In such a case, like, things do happen, and there's a lot of momentum of getting things done.
Yeah, absolutely. But there is always a layer of investor sentiment
Hmm.
on top of
Yeah.
the macro fundamentals, or the fundamentals. So it may take some time, but that is why, as Abhishek said, this is kind of the hardest question. The timing of it is exactly.
No, I mean, somebody's asking, like, other experts are saying that this is kind of, for small cap, things have topped out. Maybe it's time. I don't think so. I don't think that's the case. I think we always think that you can find very good micro monopolies in the small cap universe to outperform any kind of business model, and that has been our endeavor. But again, like, it's subject to our research and our ability to do that. But I know, if you ask me personally, I definitely don't think that's the case. I think being a strategic long-term small cap investor is way more rewarding than anything else, and that's exactly what I do in my own portfolio. Right. So Prachi, I think, can we kind of draw any inference on how asset allocation should work in a more? Is there any research about? Is there a way to think about asset allocation in a more volatile regime than a less volatile regime? Have you seen anything?
So as I said, right, those who have the appetite and the time, allocating more to risky asset may be able to you may be able to capture that compensation when other people are leaving the market. On the other hand, if you are losing your sleep every day watching the markets crashing, then you have a low risk appetite, and then you have to judge based on your peace of mind versus that. Waiting for that long term may not be for you.
Yeah, so it's really, basically, जो चीज सही लगता है, जो comfortable है, वही कीजिए. The fight is between greed and reward, right? So it's
Greed and fear.
greed and fear.
Yeah,
and,
yeah.
And so, it is important to do what is comfortable. We are there for you. Please drop us questions. Whatever we have not been able to answer in the live stream, we will get back to you with specific answers. If you drop your name and number, we'll kind of reach out to you for those specific questions to be answered.
And more general questions also, which we have not answered.
Yeah.
We will also answer them in our next episode. We plan to do this more regularly, and so that is the plan.
Yeah, every Tuesday we plan to do this. So and if there's any kind of serious concern before that, we'll do another one in live in between. So don't worry, we are there for you. We are looking after your investments as best as we can.
All right. Thank you all for joining.
Thanks.